Hello everybody and welcome back. Today we discuss the stock, crypto and commodities markets for the week ahead and the key levels that you need to be looking at. We've had an invasion, we've had huge volatility, and of course it looks like the bulls are back in town on many of these markets. But is this just a little bit too early to call it, or are we really back in a rally? Stay tuned as we break it down for the week ahead in terms of the levels. See you soon. Alright everyone, well I think the best place to start is to recap what actually happened in the previous week in the markets, and this of course will take into account the close of the 25th of February 2022. If you like anything to do with stocks, cryptos or commodities, please remember to subscribe and smash that like button if you enjoy our videos. So let's put things in perspective. I think it's really important to do so. People will be clamoring right now. Huge bullish moves over the last 2 days, and people start to feel the FOMO and feel like they're missing out. And there are some stocks that maybe you have missed out on in terms of the current movements. But let's think about Tesla, which we'll be looking at a little bit later on. It's still down 7.59% on the week. Nvidia is still down for the week, and so is Apple. So while some things are up, there are still quite a lot of stocks that were down. In terms of the Friday session, the 25th of February close, we saw mostly rallies. There was a little bit of sell-off in the structure that we talked about at the beginning of the session, but that was short-lived. The bulls instantly pushed it through, and there wasn't a strong signal there that ended up going weaker. We'll talk about some of the key levels that the bears will try to fight out the bulls this week, but it was mostly buying into the close. And what was interesting is the Dow was the strongest. This is rare. We don't usually see the Dow actually doing the best, and it's because of the sectors that were doing well on the day as well. It wasn't all about technology as much as people would think. Technology was the previous day with risk on, but the day was actually more about things like metals and mining, materials, and defensives. If you look here, some of the best performing sectors for the end of the day were actually the defensive markets. XLP, XLF finance, utilities, and healthcare. They were all up over 3%, and this is what skyrocketed the Dow and the S&P 500 forward. So it was a very interesting day on the markets, and I think again we need to put things back in perspective. What did Wall Street do? Well, they bought the whole day. What did they rotate into? Rather than being heavily on the risk side, they were actually more on the defensive side in terms of their pickups, which is a strange comparison when we think about the day before. Let's think about also where we are in terms of the year-to-date declines. Now, some people are probably freaking out and saying, oh, I've missed out on the big returns and everything that's going on. And look, yes, technically, if you were to buy in right now, you would have missed out on a percentage points on the NASDAQ. But you need to remember, most of you love tech stocks. Most of you, obviously not all of you, but a lot of you love tech stocks. You're still getting that base that was formed around that 24th to 25th of Jan. So you're not actually missing out on as much as you might think. It's just that now you've seen a cheaper price. And I think you need to put that in perspective with your investing system. Obviously, investors and traders have different mindsets. Traders really just look for movements on the day to maybe a few weeks out. And an investor will be looking more at, of course, that medium to long term, that 6 months to potentially 10 years in terms of the way they think about markets. So let's talk about what's happened so far. Well, of course, this has come true. And we've brought this up in terms of what happens with invasions. They tend to be buying scenarios. And this is now 6 out of 6 times because, of course, 5 out of 5 times stocks have bottomed. And the weakness leading up into them was actually felt a lot of the time in the market. The market was preempting a lot of these times. You can see that because at the start of the gray here, this is where problems happened. And then, of course, we got the actual invasion itself. And it was really a sell the rumor by the news in terms of it coming out. Now, that held true again, but we've got some bull and bear cases here today. And this is the problem with the market. It's kind of confusing in some ways. There are both cases. The bull probably will end up winning out because it's just statistically likely, but people are wondering, is there going to be some kind of further pullback in the markets first? Now, whether we get a new low, that might be looking a little bit dodgy right now based on some of these charts, but certainly a pullback may be in order. So big rallies to end a month don't tend to last. We brought this up in January and it tended to, well, actually, it was completely true. We saw a huge pullback in the markets in terms of what the return was for February so far. So do we have a big rally on Monday to get us to these huge rally points, these 4% plus rallies through the S&P 500? If we do, you'll notice here only 30% of the time is the next month positive, and mostly it's positive by a lot less than you would think. So remember, a lot comes down to the Monday trade in terms of what goes on in markets. I think also to put things in perspective, that if we aren't having a recession, we've actually just hit the average of all of these pullbacks. Around 15% is the average, and the NASDAQ hit 20%. So right on bear territory in terms of where the NASDAQ got to. These are both interesting factors when you consider what's going on in the market and obviously what we usually expect from pullbacks in the market if the market's going to remain bullish. So just remember, investing and trading, totally different things here. We also know that when the first rate hike comes in, the stocks tend to do better than expected. And it's a lot of that kind of sell the rumor into the actual rate hike itself. And that is what we may be seeing here again. We still don't have the rate hikes. Remember, if we put this market in perspective, we haven't even seen anything happen yet. Now, I don't think that the market considers, the actual fact being the big problem. It usually looks forward 12 to 18 months. And that's why you see that kind of buy the invasion. Remember, markets think well ahead in terms of what we're thinking oftentimes. And you have to put yourself in their shoes of what has the price action actually told you moving into these events. In most cases, the price action always tells us the same thing. It'll be weakening, let's say, into the event itself, and then the event will happen, and then it will buy. In some stocks, it'll be a buy the rumor, sell the news. So what will happen is you'll see price action move heavily in, and then the actual event will come out and it will weaken. How many times have you seen that? Ask yourself the question. Apple is a great one that always happens like that, or very often does. Let's talk about the 2-year versus 10-year. Yield curve inversion is really one of the big signs, the canary in the coal mine, let's say, for weakness in the market that is not going to be sustained. It's a good sign of recessions coming, and at this stage we still don't have that. We were talking about the 50-day moving average in terms of if we could get back down to this 10%. We ended up getting down to very similar to the 24th, which is about 20% of all companies in the S&P 500 being above the daily 50. And that really showed us again just an interesting zone where if you like buying the dip for your investment philosophy in this area, if you can ever do it, this is a good zone to target. So put that on your charts and just bring that in with your technical analysis. It does sometimes help you get some clarity to being able to purchase those dips. The VIX, or volatility index, dropped throughout the session and it's going to weaken off. It hit that resistance high, and we know the VIX struggles to hold tops. A lot of people like shorting the VIX and they short the fear kind of here, and that is a fair analysis because obviously that would be the better trade than usually trying to buy the VIX into the breaks or anything. It's easier actually to short it off these levels, not without its own risks, but it is there. So it's back down here. So let's now take a look at it on the daily. Has the VIX come down enough to possibly cause another jolt in the markets? And you would say around this level makes sense for it to possibly have another spike, but that's 2 days of heavy selling on the VIX and obviously heavy buying on the markets. The PCC, put call ratio, is stuck in the middle, so it's not really telling us too much about whether there is some hidden kind of likelihood that Wall Street will sell off the market. Sometimes if the puts were all the way back down here at 0.6 and we were looking where we are right now, I'd probably go with more likely that the market will sell off. But being in the middle, let's call it a neutral area. Remember, when you get puts really, really high in the markets, like over here on the 24th, this tends to be a good area for you to potentially buy the dip. Hence, you go against what everybody else is saying, which is they're all going bearish, chucking heaps of dollars into short dated puts, and you tend to want to obviously be the buyer into that type of thing. The markets do rally off it. Let's now take a look at gold, because it was, more frankly, pretty shocking in terms of the returns that we've seen here in the last couple of trades. There might be a little bit of a trend line here that's forming, but you can see the pressure that's being put onto. Things to do with, let's say, risk off, we're now not so hot. And if you've been following us on gold, look, this was always our target zones and we hit it. I mean, we hit the 1960. I think this is a really good case and point for why you might want to scale your orders. You still may have some gold longs, and I do as well, but you do want to scale back your percentages when you hit your key levels. Now, we've had 3 key levels. We've had the 1870, we've had the 1910, and then we've had the 1960. If we'd breached the 1960, well, of course, then we'd be looking at all-time highs and even further for gold. And I haven't given up fully on the gold trade yet, but look, it was incredibly volatile. You can see the market was just like, you know what, we're going to dump over here And I'm pretty sure a lot of people were getting into gold at this point. A lot of people didn't have the faith down here like we did, or the faith here that we did. They were getting in because the news, the storyline, what made sense was playing out. And materials do make sense, but gold is a little bit different to materials. Remember, the materials trade that we've seen pick up so much is not this one. For the week ahead, what do we end up looking towards? Well, let's look at the weekly first. That is a hideous, very bad looking rejection candle. There's no doubt that is not the kind of positive action that you want. If you ever set an alert above that 1970 area again, I think it would be a worthwhile longer term alert for traders. Just, it could happen in months time or whatever. But when it does, that would be a huge deal. Let's now talk about the 4 hour. Lots of weakness. We discussed the only way to pick this back up was really getting through that 1920 level, which we talked about in the previous session. Let's go down to the 2 hour chart now to have a look at it. See the long leg doji, the indecision. Tough pickup here on gold. If you want to grab it, I'd be more inclined to wait for it to actually maybe bottom off here and try to get back through. And I think the short side for gold is also going to be a tough trade. So we'll keep covering it, but it's going to be a tough one. Now, oil, we cautioned against this trade as well, really just because it was not sitting in the good risk management side. Sometimes when you think about a trade, you might say, look, I think it'll go up due to some form of invasion going on, and that's going to put pressure on it. But the problem with this one is it was showing us weak on technicals, and then it was really just going up off the news. It hit $100, and if you got out, congrats, that's a very good level. The weekly now looks really terrible. We've talked many times about how far away it is from the 20 moving average, the mean. And if you're feeling really bullish on oil, we're thinking this level could be fantastic. So that's around that 85 zone. We'll be looking for further sell-off pressure here. If you move through that low, which is formed around the price of $90, then probably further selling occurs, gets into that 85, 86, and you're looking for the turnaround. The type of turnaround you're looking for, lightning bolts, double bottoms, hammers, all of those types of things. Structure, supply demand. Remember, it's all about the price action and understanding the psychology of the markets. Let's move over to Tesla. And frankly, this was fairly disappointing on the day. Now, a few people in the room were trying to short this one off, and I don't blame them for giving it a shot. The problem was, did we actually end up getting any signals? Now, if you shorted the opening session, you actually didn't end up losing on it. And this is one of my shorts of choice at the moment when you're going with the technicals, because of course we know that Nvidia and Tesla have been presenting weaker than the market itself and showing some of that stuff. So for bulls this week, what are they looking at? Well, the problem is it's really tough to know exactly where you should be going long. I mean, if you look at it on a weekly, what you would do is you'd say, okay, put up the high line of the week, put up the low line. Obviously 800 is an important barrier, which you'd want in your charts. And if you're feeling like really good long-term here, you're really looking for that follow through 860. I think if we get back above 860 here for Tesla, the next move is logically towards the 945, 950 area. That'd be a fantastic move to pick up as a day trader. And this remains a very good day trader stock. The short side back below 800, some kind of lightning bolt. You need a catalyst. And that's not what we saw on the Friday trade. We were definitely leaning into the idea that there could be some kind of bull trap through the session. It just didn't present itself. Even in the indices, it just wasn't there enough. And here we have the consolidation. If we get that follow through action, that 860 is the next target. Previous support, previous resistance, and you breach that, you're getting past the last week worth of trade and you're really looking towards the bull. And the great thing about Tesla is when it picks a direction, it goes hard. And I love that thing about this stock. It's one of the best reasons why you love trading Tesla is when it makes a decision, it goes hard. Now, speaking of other kind of bullish looking things, we have the full rejection here on Nvidia. We've obviously got the tweezer that pushed us into the level. We ended up getting those low kind of zones. We made a live stream about this. I was talking about this probably being a zone for the day with the bull, and it's been a relatively big turnaround. So let's now look at the 1 hour, because this is where the conflict between the market supports and resistances are. Take a look at that. Is that a level that you're looking at thinking, I think there's problems here? Absolutely. Resistance, support, resistance, resistance. I think any trader will have a bit of an idea that if you breach through here, and this is one of those ones that you might want to watch on the Monday trade, look for the traps, look for the movement, then the next stop could be all the way up here, back into the trend line on the way down. So this pressure is a real play here for things like Nvidia. Conversely, if you want to go weak, if you see weakness and it pushes through this level, and especially through the 230 to the weak side, what happens then? The rest of the market most likely is dumping and you've got a good short. So a lot of the time, these are kind of lining up with the S&P 500, with the NASDAQ. And I just see like some nice levels starting to appear on some of these stocks. Move over to ARKK, still nothing on this one. Cathie Wood Spun still under a lot of pressure. It's done well in the last couple of days. Some people still obviously will be buying it. We're looking at that daily 20 moving average to really show that it's moving forward from a trade perspective. If you're investing, well, I mean, you're just trying to buy dips based on the S&P 500 and NASDAQ. But if you're trading, you need to have that follow through as much as possible. You might say, oh, but I missed out on this. But how many times did you see false rallies on this particular stock or this particular investment company? You just always see these false rallies. Let's move over to the indices now and discuss all of these. So the first one I wanted to discuss was IWM. Obviously the A, B, C correction. Now at this stage, it doesn't look like it's going to happen. I think this is a huge pivot point here for stocks. If stocks are able to get through the 210, while the IWM of the Russell 2000 doesn't necessarily give you the best signal, we've seen that a few times, this is still a double bottom and it would break the trend towards the downside. You'd break that effectively trend line of resistance coming through, which we'll see in a whole bunch of indices in a minute. And you've gotten through what was an incredibly critical support here for such a long time, that 210 barrier. So I think this is really where risk on truly turns around for traders. And I'm looking at that level in the future. For now though, IWM is dictated to more by the rest of the markets and is doing well, but certainly not there yet. If we look at the DAX, this was one of the signs that we had some big weakness coming. It actually got back to the 2020 highs, as in before the pandemic, and found big support there, and it's trapped in this zone. It's done a lot of the business that we actually had hoped it did. It just did it in about 2 days, so it was incredibly quick in terms of the movement. We still have this huge support level. We still have a huge resistance level. This is probably going to coincide with a whole bunch of market conditions, plus the S&P 500, etc. And it's something that is worthwhile watching over the next week. If it rejects this level, then the rest of the market will most likely be turning as well, because it's a very important zone, and this is a very important European index. Let's move over to the US 30. As we mentioned, the Dow has done pretty damn well at rejecting a very key breakout to the close side. This was one of our case scenarios that if this had closed below for the week, that further weakness was coming, and the big chance of 30,000 on the Dow and 3,800 on the S&P was going to be present. That didn't happen. It just rejected it and has created a bullish looking hammer. So we have a high here now for the follow through, and let's just break down that level, because I think it's a pretty important level here for traders. And this is where a lot of people will start to try to bring together storylines to have a bit more success. On the Friday session, we saw it breach this downward trend that had been following for a little while on the Dow. Pretty important. And really around this level now, it's going to be the big fight. So it's within a few 100 points here of actually having a big fight level. Support becomes resistance. And when we look at the other markets, you'll start to see why. QQQ, huge rebound. Weekly, let's take a look at it. Big bullish hammer. Weakness candles coming in. Okay, we got that correct. Weakness down to a level. It actually in the futures, remember, hit more around this support here, which is exactly where we pretty much just suspected it would go for the first touch, and then it's gone bam, straight back up. If we start to see follow through, and we pretty much have to be with the bulls at that point to a degree, and that bull movement could go all the way back up to the 20 moving average and the previous resistance. But it's even less about the QQQ, the NASDAQ at the moment, and it's more about the S&P 500. We are at a resistance. It was the weaker index for the day. We didn't see as much bullishness. And look at that little bit of a trend line that's coming back down off the tops here. We're basically sitting on it. So we closed the day sitting on a bit of a downward trend line, the 50 moving average on the 2 hour here, which has been touched once before. And the S&P 500 is getting dangerously close to a level where the bulls and the bears will really be fighting it out for the next zone. The bears lost at the 4,300. The reasons why could have been very much to do with short squeezing and also closing all of the puts for the week, which we talked about before, that 420, 430 kind of put levels. They all got expired worthless. So imagine being a put owner during the week. You would have thought you would have had extreme highs and extreme lows if you didn't close it off. And this market is nasty. It closed fully above those levels. If we think about next stop though, round here is going to be a big deal. We've got a 200 daily simple moving average. That's the green line. That's a no joke moving average. We've got a 20 moving average coming up as well on the daily, which is still big level. And all of that's going to coincide with the downward trend that currently has foiled every single rally. So at the start, we talked about a stat, and that stat basically said that if we get a big rally, let's just say Monday rallies hard, another 2% and hits this level, that the next month turns out to be quite poor. In fact, it's only 30% positive most of the time. So if we get this rally, that puts in 2 massive days. It brings up the stat of the next month being pretty poor into, of course, non-farm payrolls, which we're going to see this week, and the Fed itself and their first decision on interest rates. And they're unlikely to take the foot off too much. In fact, I'm thinking 0.5%, but I'd love to see you in the comments. What do you think is going to happen with these rates? Let us know in the comments down below. So this movement up to here is really one of the next levels. We're at a closure that's already a level. There's a lot of big kind of plays to be made here. This is not maybe as strong as the others, but we are still sitting around that 4,400. That's going to be an important structural zone. So if you see weakness coming off here, you're looking for lightning bolts. If you see it come up into this level, I think a lot of take profits from that huge rally that we've seen will come through. So very important area for the bulls and the bears. At this stage, if we think about it also from a weekly perspective, we closed above the 50 exponential moving average. And you guys know I love that. I mean, if you're talking about being a bull, closing above the 50 exponential moving average almost solidifies your low. And that might be bad for our worst case scenario, 380, which was 20% down. But you don't really want markets down that low. This is a big closure for it. Getting above the 50 is just such a huge deal. If you scroll through history, when it goes below the 50, bad things happen. But when it hits the 50 and bounces, or even holds it, it tends to be the end of the downtrend, or at least the bottom is in. Like over here, look at this. This is very similar, obviously not as big a sell-off, but still a very similar scenario here where we ended up rallying and continuing up. The 50 is a huge deal. And when it holds so strongly, that really can be kind of showing us that maybe we've got a bottom in here. Follow through will be all important throughout the Monday session as well. And we're kind of thinking like something like this may occur. Back down, allow Wall Street to grab its orders in before the Fed, and then possibly that's where we see the bottom. Is this the bottom? The head and shoulders, remember, that was a scenario we were talking about as well. It's a weekly head and shoulders. What didn't happen? Technically, the neckline never broke because it's gone back up against it. So that left-hand side, the head, the right-hand side, this is how fast things move in the market. And it's why we suggest you have 2 different strategies. A trader doesn't really care about where the market's at. They're just looking for opportunity. They have an entry, they have a stop loss, and they have a take profit. An investor does care about the price obviously more, but they're looking at probably using something like a DCA strategy, adding to their orders at key supports. So obviously the 50 moving average here was a key support, a great place to add. You'd probably be crying about it over here, but not anymore maybe, but it's still a good level. Then down at this zone, we knew that we had support as well, especially on the NASDAQ, which was what a lot of people were buying. So you add your entries, and of course, what it's more important about is entry and then your time frame. What's your time frame going to be? So investors and traders have different philosophies on what they want to do. I try to blend it here on the channel, but it's looking at this stage that may have been the bottom in terms of the big lowest point. You may disagree with me, but that's a strong close above the 50 and we can't ignore it. History is pretty determined towards 50s. And when you get underneath, we know the power of the short that continues. It didn't happen here. Let's take a look at options for the week ahead. Lots of options sitting at that 460 level. That's of course the huge SPY resistance. So 460 is right here. Of course, there's going to be huge resistance at that point. That doesn't really help us that much. We'll move over to Bitcoin. Bitcoin just rejecting the previous support level being resistance. It's on the weekend. It can kind of do what it feels like now that the other markets are closed. This coin will still move with the NASDAQ, with the risk on kind of concept here. And if we close above, where's the next level? Well, it's going to be around that 44,000 for Bitcoin. And then of course, past 46, well, things are looking really good. Full recovery for Bitcoin, huge bottom base in. And yeah, it's on in terms of risk on assets are fully back. And you will see that across the stock markets. For the week ahead news-wise, we move through here and you'll notice that we've got Fed Chair Powell coming out. Oh, yay, so much fun. We've got OPEC meetings. Yay, so much fun. And then we also have the unemployment, non-farm employment change. Like, you know, this is the big information that comes out. It's going to show us a lot. We've got PMI as well. I mean, there's a lot of information backed into the back end of the week coming. We expect it to be a news related week and news to hit around this market. And of course, the technicals, you need to be looking at the key levels. Follow us over on Twitter. Of course, we do post a whole bunch of stuff here. So make sure you follow FX Evolution on Twitter. And if you're interested in finding out more about some of the ways that we trade the markets and we invest and we look at things a little bit differently to others, then consider we've got a bit of a sale on our courses at the moment. And we've got our Ultimate Masterclass on sale, Options Trading Masterclass, and of course, the FX Evolution group mentoring. So if you're interested in any of these, click the links in the description below, have a read about them. If you have questions, feel free to message me. Thanks for watching the video today. Remember to subscribe, smash that like button. We'll see you in the next one. Bye for now.